Okay, let's take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word of how BTA analyzes the markets, how we look at the market, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we're not going to get out at the exact top, but we do make money in the middle. What I want to look at today is the daily chart of the ETFs that track the major market indexes. Okay, the ETFs that track the major market indexes. And let's start out here with the Dow Jones. Okay, let's start out with the Dow Jones. So let's expand this a little bit so you can see it. Okay, let's get this expanded a little bit. And let's maximize it a little bit here. Let me bring this in a little closer for you. Boom. Okay. Now, this is a daily chart of the Dow Jones, and basically, we have our moving averages on here. The white line is the 5-day, the green is the 9, and the yellow is the 21-day. Now, the good thing about today's action, it's a couple of good things about today's action, okay, on the daily chart, is that prices came down almost to the penny of the 21-day moving average, and it stopped there and found support, and it closed above the 21-day, and it closed above this white moving average line, which is the 5-day moving average. The other good thing is that we're coming together here with a lot of key areas of that, key moving averages that could be areas of interest, of support. So we got the 5-day moving average right here. We got the yellow 21-day, and we got an uptrending green 9-day moving average. They all right here together. That's actually a good thing, because now we have an area of confluence. That's what we call that, an area of confluence, where a lot of things come together and they can act as support or resistance. Okay, so that's actually a good thing. All right, and we found support right here. We didn't break below and close below these key moving averages. Okay, so that's good. Now, the things that could be a problem for us, or as my mentor used to say, could be a problem, son. I got problems. Okay, we don't have problems yet, but we got some potential problems. All right, so it's this here downward trending 50-day moving average. That can be a problem. Anytime you're getting a downward trending 50-day moving average and you're moving right up to it, you got to be careful, because prices, just like it did over here, prices could go right up to this 50-day moving average and get rejected. Okay, so we got to be careful that we don't trade up to this 50-day moving average and get rejected. All right, so that's our real main area of interest right here. If prices does try to recover and move upward. Now, the next thing that's a problem with on this chart is that if you notice, the high of today is higher than yesterday's, and the low of today is lower than yesterday's. So that's an outside day. Okay, that's considered an outside day. But when prices close on the lower end of the range, almost down near the lows, that's considered a bearish outside day. That's not a good outside day. A better outside day, what we would look for, that wouldn't be that bad, it would be a bullish outside day. If prices were to close up near the highs, or at least above the middle area here, that could have been a bullish outside day. So what we have here now is a bearish outside day. So we got to be careful. If this volume down here was above average, I would tell you that probably, okay, it's a very high percentage chance that the next 2 or 3 days will be down. Okay, you got to, anytime you get a reversal day like that, where the volume is higher than the previous day and above average, it's an extremely high probability that the next 2 to 3 days will be down. Okay, so next 2 or 3 days will be down. So this is something we got to look out for come tomorrow. This is really a bearish outside day. We got to see if this can improve right here. Now, let's look at, I want to bring up real quick, I want to go straight to lowest, okay? because this is important. I want to go straight to lowest because those areas of confluence that I was talking about is also being shown up here on lowest. Let's maximize lowest. Let's bring it up a little bit. Let's open this up a little bit more. Okay, so take a look at lowest here. Okay, we talked about that 21-day moving average, right? And we saw that 5 and that 9 was all right there together. But look at this. The blue line for lowest below prices is also right there. That's key. That's key. Because if we break below and start closing below this blue line of lowest, soon, if that continues, then lowest is going to give us the magenta line that's above prices, okay? And that's going to tell us that we may be starting a new downswing, bearish swing. Remember, lowest stands for the launch of the immediate swing. Lowest, launch of the immediate swing. So we got to be careful of that. All right, we don't want prices to break below this blue line. But the thing is that the blue line is right at the 21-day moving average, which is a good thing because now we're getting even more confluence, right? We got the 21-day moving average there. We got the 5. We got the 9-day moving average. We just looked at. They all right there near the bottom of price. You got this here prior support, which is now resistance. These horizontal resistance line. What was prior resistance? I mean, now it's support. I'm sorry, because prices are coming down. They want to act as support. So we got these horizontal lines that was prior resistance now acting as support right around 326 and 327. Okay, so 326 and 327. So we got a lot coming together here in this one area. That is area that is causing some confluence, some area where a lot of things are coming together. So this lowest, with this blue line of lowest being right here, right at the bottom of price, listen, that's actually a good thing because if we break below all of that, we know it's a problem. Okay, if we start breaking below all of this confluence, all these key averages, okay, if we start breaking below all of that, we know that we got a problem. Okay, that's just facts. All right, if we start breaking below all of that, we know we got a problem. So let's go now and let's go back and look at. Okay, sorry about that. Let's go back and look at some more charts on the daily screen here. Okay, so let's bring up the structural chart right here. Boom. All right, let's expand this a little bit so you can see it. Okay, let's move prices up a little bit so you can see it. Let's open this up a little more. Okay, and let's expand this area a little bit so you can see this good. So notice this overhead resistance right here. Notice that overhead resistance right there. See, right here. Okay, we got this horizontal resistance area. So right here at 333, and this other horizontal resistance area is at 332.33. So for the last 3 trading days, 1, 2, and 3, we have traded right up to this level and stall. Okay, we have traded right up to this level and stall. We haven't been able to get above this. And today we got, like I said, we got that bearish outside day. Now it traded right down to this horizontal, okay, support level, all right, at 326.06. We just spoke about this level at 326, the 326 level. We traded right down to that and we bounced right on the 21-day, right above the 5, right above the 9, right above lowest. So that's understandable. That's good. But this overhead resistance is holding strong. For the last 3 days, we couldn't get above that. We need to see prices get above this. And here, this red line is a red weekly resistance level, a longer term resistance level, which is at 331. Okay. So the DIA, okay, is clearly at an inflection point. All right, it's clear, y'all. It's no doubt about that. The DIA is at an area where it has to do something. You caught right at key support levels, a lot of confluence, a lot of things coming together, but you stuck with overhead resistance. Okay, it's at a key inflection point. It has to do something. Okay, we got to keep an eye on it because it has to do something. All right, it can't just stay there. It has to do something. Now, uh, one thing is that I'm noticing here, if we look at the DIA, I want you to just look at down here where the MACD, the stochastics, and the KTS is at. All right, that's not looking bad. Okay, let me expand this so you can see it. That's not looking bad. Okay, notice that the MACD, we do have a bullish crossover here. Okay, we got the bullish crossover, the histogram expanding. The stochastic Ben gave us a bullish crossover. It's up in the overbought area. Okay, it's well above 80, and it's starting to give us like a little bearish crossover right here. The yellow is crossing below the little crayon line. That's a bearish crossover. It is in the overbought area. Okay, so we got to make sure that this doesn't recycle and start coming down and start getting back below 80. Okay, if that happens, that can be a problem. All right, but if it comes down and gets below 80 and keeps going, it gets below 50, that's when we really got a problem. If it comes down, get below 80 and recycles and head back up, that's okay. All right, we don't mind seeing the stochastic above 80 in the overbought area because that means that the momentum, the prices are closing higher and higher in its range. That's good. That's what we want to see if we're long. All right, but when you're bumping against overhead resistance and things of that nature, you got to be careful. You got to be mindful. Okay, so that's one of the other things we need to look out for. All right. Now, besides that, look at the RSI. Okay, I want to expand this so you can see this. The RSI. Okay, the RSI is. Let me see if I can expand it just a little bit better, so you can see it good. Okay. Well, you can't really see it that great, but the RSI, okay, the RSI here, right down in here, is starting to get close to this 50 level. It's at 51. If this start breaking down below 50 and heading back down to the 40 level, then that's a problem. That's telling us that the momentum is coming out, okay? So we don't want this RSI to start heading back toward the 50 level, okay? That can be a problem, all right? If it heads back below the 50 level, rather, that can be a problem. If this RSI breaks below the 50 level and heads back down to the 40, that can be an issue. We don't want to see that, okay? We don't want to see that, all right? So now let's go and look at what's one of the things we try to analyze, the volume. Okay, we want to make sure we look at the volume from different areas. We looked at the bars, the average volume bars, but now let's look at the on balance volume. Okay, so up top here, we have the green line, which is the line of closing prices, right? This is a line chart of closing prices. Here's the peak. We got a vertical line going right across there. Notice the on balance volume line is trying to break below its prior high. Same thing for the price volume trend. Okay, it's still above it, but it's trying to break below it. Now, that we really don't want to see. If we go here and we put a vertical line across the prices here, you see we're trying to come back. If prices break below its high, and then the on-balance volume breaks below its high, that's telling you that the volume is starting to come out. That can be a problem, okay? That's telling us that the volume is starting to come out, all right? We don't want to see that. Now, let's quickly look at so we looked at the DIA there. Let's try now, let's look at the Standard & Poor, okay? So let's go back to our four windows here. Let's change it to the Standard & Poor, okay? Now, with the Standard & Poor, okay, here's a daily chart of the Standard & Poor 500. All right, let's expand this so you can see it. It's a daily chart of Standard & Poor 500. All right, notice, we have some similar problems, okay, and some good issues, some bad, right? But you see on the Standard & Poor, the same thing. We close right. We touch the 21-day moving average with this yellow line here. This yellow moving average line is the 21-day moving average. We traded right down to it and we bounced. We closed above the 5 and we stayed above the uptrending 9-day moving average. That's all good. Okay. Now we almost had, it's not quite there, but we almost had another bearish outside day. You see, it was almost there. But the high is not quite higher than the previous high. The low is lower than yesterday's low, but the high is not higher than yesterday's high. So we might have avoided, okay, that bearish outside day that we had on the DIA. But in any case, we still got the same problem. We got this downward trending 50-day moving average, okay? That's a problem. So we need to be careful right now of that downward trending 50-day moving average. And at least we're holding support at the 21-day, and we're holding support at the 5 and the 21-day. Now let's go straight over to lowest, right? And let's see how lowest looks here. Let's expand lowest a little bit. Okay, let's open it up and let's move it up. All right, so let's see how lowest looks. Look, this is the same thing, which is a good thing because we got an area of confluence here. Look at lowest on the SPY, similar to what we saw on the DIA. Lowest is right there near the 21-day moving average. That's actually a good thing because now we got some key areas of support. Prices don't normally close below lowest. If prices close below lowest, then lowest is probably going to eventually, and to stay below lowest, lowest is going to give us the magenta line above prices, telling us we got the start of a new bearish swing, a new downswing. Okay, so we got the 21-day moving average as support. We got lowest as support. That's actually some really good support levels there. That if it breaks, we know. If it breaks, we know something went wrong. Okay, let's minimize. Let's look at the structural chart. Let's look at the structural chart of lowest, right? Of the SPY. Let's look at the structural chart of the SPY. All right. Let's go back here. Minimize this. Let's look at the structural chart of the SPY. Okay. In 1 second. Let's bring it up. All right. So here's the SPY. Here's the daily chart of the SPY. This is our structural chart with our trend lines and moving averages on the SPY. Let's maximize it. Zoom in a little bit so you can see it. Let's bring it up a little bit here. Here we go. Okay. So notice on the SPY, okay, similar to the DIA, all right, we have some key overhead resistance levels. The strongest one looks like it's this 414.70 level right here up top, 414.70. You see we hit it and we tried to get above it for the third day and it couldn't make it. Okay, so for 3 days we couldn't get above that 414.70. All right, and now we pull all the way back here and we close below the other overhead resistance, which was 410.50. So we got to get above this. We got to see this thing turn around and get back above it. We need to get above 414.70 and close above there, and that will make us feel a lot better. Now, one of the things that we have to keep in mind that we did come out of this downward channel here. Okay, we had a downward channel here where prices were staying within this downward channel. All right, we broke out of it. That was good on last week when we had the follow through day. Okay, but we're stalling right here at 414.70. We can't seem to get above this resistance level. All right, we got to see that. If not, it's a chance. It's a chance, especially if we close below lowest. Okay, if we get below lowest tomorrow and it close below lowest, it's a strong chance that we could come back down to this 397 level. All right, definitely. This is a weekly, longer term support area that was acting as resistance. Now we needed to act as support. Okay, now we needed to act as support. It's a possibility we could come back down to this. That's around 397.17. So we want to be careful of that. We want to be mindful of that. But this overhead resistance, there's a lot of overhead resistance that we need to be careful of. We got to keep our eye on this stuff. All right. Now, if we go to let's go to our chart where we have our RSI. Okay. Matter of fact, let me try to delete this. Okay. And let me see if I can bring this up a little bit. All right. Let's see if I can bring this up a little bit and expand it so you can see it better. All right. Let's now expand this here so you can see that RSI a lot better. Boom. Okay. Notice that the RSI line right here is trying to get back below 50. It actually is at 50.16. This RSI line right here. This RSI line right here. It got above 50, but now it's pulling back. Okay. And now right now it's just peeking its head below 50. It's at 50.16. We need to see the RSI stay above the 50 level. If we start closing below 50 and start moving back down toward the 40 and the 30 level, it's telling us that the momentum is heading to the downside. The momentum is more bearish, more downward momentum than upside momentum. That's not good. Okay, we need to see this RSI stay above 50 and then get above the 60 level. That's a real confirmation that the bulls are back in control. It's more bullish, more upside momentum. When we start getting below that 50 level and start getting down toward the 30, or toward the 40, that's a problem. So we got to keep an eye on this momentum, right? That's not something we want to see. We got to get back above that. We have to. If we don't, it could be then we could mess around and have a problem. All right. Not a problem. Now we got problems. Okay. As my mentor would say, now we got problems, boy. Problems. All right. We don't want that. We can deal with little small problems. Now, this is not good. There's no other way to put it. Okay. I just got it straight up. This is not good. All right. Now, look at the on balance volume. This is not good. This is actually a real serious warning sign. So here we got a line of closing prices, and this the peak. Now you see prices got back above its peak, and now it's pulling back. We don't need to see the line of closing prices break below that. But the problem is that the on balance volume has already broke below its peak. That's telling us that the volume is starting to come out. The on balance volume is leading prices below its peak. It's leading right now. See the on balance volume peak here? This is the peak of the on balance volume. We got this vertical line going right across the peaks. Notice the on balance volume is leading it out. It's breaking below its peak ahead of prices. That's not good. That could be a sign that someone's selling. Someone's selling. Some institutional investors could be selling the SPY. We have to be careful of that. If that continues to look like this, then that's a problem, okay? Because somebody could be selling the SPY. All right, now let's go back to our moving average chart and let's look at the QQQ real quick. All right, same thing. Okay, we're sitting right on key moving averages that can act as some support. Okay, you see it right here. All right, let me see if I can expand this a little bit better. Look at that. Okay, so you got this yellow line, which is 21-day moving average. You got an upward trending 5, and you got an upward trending kind of 9-day moving average. So all right here together, you got the 5, the 9, and the 21. Price is closing right on it. We've traded down to it, and we held it as support. That's good. We held it as support. That's good. Again, one of the bad things is this downward trending 50-day moving average. We got to get this downward trending. We got to get this 50-day moving average to stop trending down and kind of turn up a little bit. That's a problem. Now, just like on the DIA, we avoided it on the SPY, but just like on the DIA, if you notice, if we put a line across the highs here, today's high right here was higher than yesterday's high. Today's low is lower than yesterday's low. We got an outside day. okay, we got an outside day, and it's a bearish outside day because prices closed at the low end of the range. It's a bearish outside day, and it was a down day, so it's a bearish outside day. That's not good. We got a bearish outside day, and we had distribution. We got lower prices with higher volume than the previous day. Okay, lower prices with higher volume than the previous day. So for the Qs, this is a problem. If you those here, the volume on the Qs yesterday was just say 60 million 900,000. Today is 65. Okay, so as you can see, we got higher volume today. And if I just put the crosshairs above here, you can see it. We got higher volume today than yesterday. Okay, so that's not good. All right, that's not good. So we got a bearish outside day. Okay, we got a bearish outside day. We got distribution. All right, we got a downward trend in 50-day moving average. Not good. All right, the only thing good about the Qs right now is on our moving average chart here is that we're coming down right to some key moving averages that's all coming together in the area of confluence that can act as support. Let's see if we can bounce off of that. Now let's go straight to our chart of lowest and see if she's sitting right there also, because if she is, that's a good sign, right? Let's maximize this so we can see it. Okay, let's bring it up a little bit. So there it is. So here's our chart of lowest. And once again, lowest is telling us, hey, right here, we got this blue line. And it's right at the 21-day moving average. And it's right at the price is closed right at the blue line of lowest, which is our sign that we on a bullish upswing. Okay, a bullish upswing, an upswing. All right, we on an upswing. And the 21-day moving average is right there. Price is closed right at it. We touched it, both of them. We sat right on the blue line of lowest and the 21-day moving average, and we closed above it. Well, that's a good thing. So now we got confluence. We got a lot of confluence areas that's coming together here. Okay, we got the moving averages on the other chart. We got the 21-day moving average. We got the shorter moving averages that we just looked at on the moving average chart, and now we got lowest. That's all coming together right there. Okay, so that's actually a good area of support. If we start breaking that, that's a problem. All right. Now let's look at the structural chart with our moving averages. Okay, look at this. This doesn't look good. Okay, like I said, it's only I can't sugarcoat it. I only can tell you straight up. You know what I'm saying? This don't look good. So we got that bearish outside day. As you can see, we looked at that before. You can see it again right here. We got our bearish outside day, right? Higher. But look what happened here. Look what happened here. This overhead key resistance level, this horizontal line with the resistance level, we got resistance at 311.98 and we got resistance at 315. Okay, so we got overhead resistance. Now, but look at this. This trend line coming through here. This internal downward trending trend line. All this is acting as resistance. All of that is acting as resistance. So that is a problem. We got to try to get above that. Now, the good thing is that we traded down right to this downward trending trend line, which is the top of this channel that we had. We had a channel going on here where prices could not break above it. Okay. And on the Qs, because this is a daily chart of the Qs, just in case I didn't mention, it's daily chart of the Qs. But look, we came right down, we broke below that channel line, we got back into the channel, but we closed a little bit above it. If we fall back inside of here, we got to be careful, because now this can act as overhead resistance, and then we could break below this long-term weekly support level, which was prior resistance. Now we wanted to act as support. If we break back below that, okay, if we stay below this downward trending trend line, okay, if we stay below this trend line here, this channel, if we get back below that and have resistance there, make our way back down to this weekly horizontal level, which is now acting as support, is right around 297.45. Okay, if we keep riding that, we could break this and head right back down to the lower end of this channel. That can be a problem. So we need to be careful. Okay, We have to be careful right now. And this is not good. This is another thing that's not good. Look at here. If I put a line right here, remember this was our double bottom, okay? The middle of our double bottom was the pivot. This was our double bottom, right? So the center, the higher the center point was our pivot. Well, today we closed below that on the cubes. So today we closed below that. But we found support right at the top of this trend line here that's at the top of the channel. If we start breaking back below this pivot point on the cubes and get back below this trend line, we got a problem. Okay. Now we got problems. All right. Not just a problem, problems. All right. It's getting to be bad. So let's look at the on-balance volume of this. Okay. Up top, we have the green line, which, like we said, is the line of closing prices, right? Up top here, right here, we got a vertical line right at our peak. Okay. We got a vertical line right here at the peak, where this is our peak of our most recent high of closing prices, right? We got above that. Look at price trying to break back below that peak, which is now supposed to, we wanted to act as support, but we breaking below it. Look at the Qs. Look at the on-balance volume line for the Qs. It found resistance at this peak, and it's trading down on it. Same thing with the price volume trend. Look at the vertical line across the highs. It found resistance at its peak, and now it's trading down on it. That's not good. That could mean that someone is selling the Qs. Large institutional investors may not be buying into this rally as it seems. Okay, so we got to be careful. We've seen that on the SPY. The large institutional investors may not be buying into this thing the way we want it. Okay. Now we know we had a holiday weekend, but now we had 2 trading days since the weekend, and that volume picture is only getting worse. So it's only so long we could continue to blame it on the holiday, right? The picture is not improving. It's not getting better. Okay, it's looking a little worse. Now, let's look at the IWM, and we'll stop here. This will be the last chart we look at is the IWM. Okay. Look at the IWM. Let's maximize it so you can see it. Okay. Boom. This is the IWM, the ETF. This is a daily chart of the IWM, the ETF that tracks the Russell 2000. Now look at it. Look at it here. Okay. This red line, key. This is the red line is a weekly, long-term weekly horizontal level of resistance. It's at 187.92. For the last 2 days and 3 days, we cannot get above that. We are actually rounding off the top right at this overhead resistance. We broke back below this support right here, which we wanted to act as support. This prior resistance level here on the daily chart, this is the daily horizontal level. We broke back below this support area at 185.44. That's not good. Okay, that's not good. Now, if I take a horizontal line and snap it right across this high, that's the high of our double bottom. That's the middle point, okay, of the double bottom right here. That was our pivot. All right, so we broke above that last week when we got the follow through day. So today it did trade below it, but it would manage to recover and close above it. That was good. And we closed right above this internal downward trending trend line right here. We got internal downward trending trend line. We closed just above it. But we are coming upon a lot of overhead resistance. Okay. This is not good. Okay. This is not good when you look at this overhead resistance right here. We coming upon this long-term weekly resistance level, which is the red horizontal line. That's not good. All right. Let's look at the moving averages for the IWM. This is the IWM, our moving averages. And once again, look at it. Let's expand this a little bit more. As you can see, it's the same picture. So all of the ETFs, we have to admit, all of them are giving us the same pictures on the moving average charts. where we closed just above the 21-day moving average. Okay, we above the 5 and we above the 9. But we got this downward trend in 50-day. Okay, so we are at an area of support. We got a lot of key moving averages coming together, acting as confluence. All right, so that's good. Okay, so we know that this is a very strong support area. But if we break below that, that's a problem. That's not a good thing. So right now we got some strong support levels, right? Well, let's do something. Let's look at what Lois is doing. Let's see if Lois is giving that same confluence to us that everything else was. Okay, all the other major ETFs, right? Let's make it a little bigger. Let's bring it up some and let's expand it. Okay, this is our daily chart of Lois. Okay, let's bring it up and look what she's showing us. Prices came right down to Lois and it got above it. Here's the blue line that Lois generate, giving us the signal that we have a upswing, a start of a new upswing. Lois stands for launch of the immediate swing. The blue line is telling us that immediate swing is going up. We have an upswing. Well, we came right back down to it and notice, Lois is now above the 21-day moving average. The 21-day moving average, the yellow line, is below Lois. We traded right down to it and we closed above it. Now, this is key. So now we got everything we need to see on all of the major index ETFs. Okay, all the indexes that tracks the major market indexes are all right at key support, where they right at the 21-day moving average and Lois's blue line. If we break that and close below that, we have a problem. If we start breaking below Lois, that's a problem in itself. Okay, so we got a lot of things coming together at confluence. We got a lot of support right below prices. Okay, right below prices. And another way you could look at it. Okay, on all of the major market ETFs, major index ETFs, is if we close below today's low. So if tomorrow we close below today's low, we know we broke all of this. We broke all those areas of confluence almost. But mainly we broke below the 21-day moving average and closed below it, and we closed below Lois. Not good. All right. That's a sign that for us, that's a sign that we got some problems. We better be careful. Okay. So now let's look at the on balance volume for the IWM. Not a good thing. This is not a good picture. So there's a lot of things that's not too good right now. Okay, I just got to be straight with you. It's a lot of things that's not too good right now. If we look here, okay, here's our vertical line. Here's our high. This is our green line, is our line of closing prices, right? Our line of closing prices. We trying to break back below that previous peak, that previous high. We need this to act as support and bounce up. The problem is, the thing that doesn't look good, look at the on balance volume. It broke below its prior peak already. It's leading prices to the downside. Same thing with the price volume trend. It broke below its previous peak. It's leading prices to the downside. So prices are being led to the downside on the volume picture of the on balance volume. That's telling us large institutional investors may not be buying into this little relief rally. I'm telling you, this is not a good thing on quite a few of them. So they got the IWM that's not good on the on balance volume picture. If we go to the SPY is not good. This is daily chart of the SPY. It's not good on the on balance volume picture. It's breaking below its high ahead of price. If you go to the QQQ, it's not good on its volume picture. It hasn't been able to get above the prior high. Okay, its prior high on the on balance volume. The only one, okay, of these four major market ETFs is the DIA, but it's coming right to it and getting ready to break it. So the Qs, the SPY, the IWM is all right there. It has all broken below its previous high on the on balance volume. The DIA is the only lone holdout, but it's right on it. A down day tomorrow will probably push it right below its previous high. So look, the moral of the story, to sum it all up, we got a lot of overhead resistance. Okay, we got a lot of overhead resistance. We ran up to some key overhead levels and we got rejected. We sitting on support that if it's broken, it could be a very bad picture. And the on-balance volume is already telling us that the volume may be coming out ahead of time. So we said it in the previous couple of videos that we was coming against overhead resistance. We said that the follow-through they had a 50% chance of failing. This here picture that we're looking at right now, okay, at the end of the day, at the end of the day, today's trading action is telling us that it doesn't look good. The weight of the evidence is almost starting to point to the downside, that the rally may actually fail. That 50% of failure may come true. It's a 50% chance of failure right now of the rally because we had the distribution day right after the follow-through day. Okay, but that's 50%. So I mean, it got a 50% of chance of going up also. But now the picture is starting to get a lot more bleak. Okay, it's starting to get a lot more bleak. All right, so that was, as they would say, so that's not good. Keep your eyes open. Be careful. We're going to analyze the weekly chart next, and we're going to stick with just the 4 major market ETFs, the ETF that track the major market indexes. We're going to look at it on a weekly level. But right now, the daily charts are telling us we're sitting on key support, and the volume may be coming out. Okay, so look out for the weekly chart. We're going to analyze the weekly charts, okay, with the Bollinger Band strategy, and let's see how that looks, okay, and the support levels and the moving averages on the weekly chart. Okay, see y'all in the next video.